Hello, everyone. I hope you guys are having a wonderful day and are making some really good trades. Now, let's dive in. Excuse me, had to burp there. Dive in right into the analysis. So, right now, market's kind of chopping sideways here right before the Fed meeting. This is to be expected. Again, I'm not surprised that we filled the gap today after we gapped higher. And by the way, the markets have made technically a new all-time high. So you actually could have just completed the fifth wave today, and it's over, and that's it. All the counts are completed, and we're ready to crash. Well, as much as I would love to believe that that's the case here, I think that's the more unlikely scenario to play out. I think what's going to happen is like we're most likely going to get a dip of some sort. If the wave one wants to extend on the Fed pump, then that's okay because it can extend, right? Wave threes can extend. So if you get a sharp rise tomorrow on Fed day, and you see a divergence erased on the 45-minute, then the third wave is going to extend, and the fifth you're going to need another 4 and a 5. So this can go higher, right? But ultimately you're going to need a pullback for a dip buy in wave two because nothing goes up in a straight line. We know this. Now I wouldn't be surprised too to see a pump up higher again to extend this fifth wave, but ultimately continue to build bearish divergence. At which point this would be a short term, maybe short signal because you're going to get a lot of FOMO. But I wouldn't be shorting into a pump either because it could get out of control and you can extend the third wave. So regardless, I'm not looking to short right now. If anything, I'm looking for a dip buy for higher prices. So that's where I'm at right now. I'm not in any trades. And again, a lot of people are like, "Oh, this is useless information. He's not going to guarantee an outcome." Like, of course not. I don't know where the market's going to head up or down, but I'm ready to react according to the price action. People who try and bet on, how the market's going to react to something is a little bit crazy to me. For me, I just look at my levels, and when my levels hit, I short and I long. And that's as simple as it is, right? I mean, like, look at NVIDIA. A good example was NVIDIA, right? You hit the short area and it was a sell-off. It was a sell-off, right? This was your short area, right? You don't try and predict what the market's gonna do. Like, oh, the reaction should be positive, and then sometimes it pumps and it dumps on them, and they're like, "What? This is so stupid. The market should have reacted this way, and I bet big that it should have reacted that." And you know what? And then they end up losing money by doing that. So, anyways, I think that the best thing to do would be to just look at your levels, and if your levels hit, you long. If your levels hit, you short, right? And if they don't hit, then you're just sidelines and you sit on your hands. That's the problem with most people. They just can't sit on their hands and wait for the trade to play out. So, anyways, right now, nothing is hitting for me yet, and I wouldn't be trading into this right now. I'm going in a very cash heavy. Most positions are actually in the green now for me, except for maybe I think AMC. I think we have like a very small share size in AMC, and it's not doing too much. It's not. I mean, it's just chopping sideways. Really, it's not doing going up or down. But anyway, so as far as the Qs go, the Qs, in my opinion, are at a resistance point. Could they break out? Yep, they for sure can. You got a gap fill here, but for me, I wouldn't be buying unless the Qs hit this level down here at 425, which is a long ways away. But again, sharp sell-offs can guarantee you for you to get there pretty quick. And we also have lots of anticipation of Fed cutting rates, and maybe if they don't live up to the expectations, maybe the market's going to react negatively, sell off. Then the Fed's going to come to the rescue in a statement the next couple of days and say, well, you know what, given the new data points, it's time to start cutting even more and like counteract what they're going to say. So I don't really care what they're going to say, right? I just care where the price is going to go, and if that's going to tell me if it's time to short or if it's time to long. So regardless, I'm not gonna be going too crazy here in the next couple of days. I already told the Discord. I even show you. I said it's not about making money; it's about preserving money. headed into the Fed meeting, rallying into the Fed, and everyone's getting bullish. Like you could easily get a sharp reversal, right? So it's time to be cautious, not super risk on, right? If the Fed signals it's time to get risk on, then that's perfect. Then you got the trade set up, and this thing's just gonna moon. But until then, I'm just gonna be waiting. All right, I think I've talked about enough what I'm gonna be doing. Let's talk about what the charts are doing. So let's take a look at the DXY, right? So right now, DXY got a bit of a bounce today, and it helped the USDJPY trade today. It bounced up nicely. Big reversal. I think it went up like 81. Wow, 1.4%. It was 83 basis points for me, I think, at one point last time I checked. Now you're getting a bit of a sell-off once again, so at least you have a pivot to trade against. So you got some nice bullish divergence here on the USDJPY. But this pair is very weak. You got the yen strengthening. You also got data coming out on Thursday for the Bank of Japan. So that's going to influence this pair significantly. And if it does ultimately get a bigger reversal higher, then I told you guys you have a target off this pivot. It would be a flat back up to 151. This is something that no one foresees at the moment, and everyone is not looking at this, right? Everyone thinks that it's just going to crash right away, which it can, right? The target for it to crash all the way back down is 129. If we were to moonshot up to here, I would get very bearish very quickly on the markets, because at this point you're going to be getting set up for a major sell-off in the USDJPY pair. So that's what I see at the moment, but you can't discount what's happening here, right? This is a very good possibility that it could bounce in. At this point, it's a low risk, high reward trade in terms of like percentage points. Like you have stop out levels, right? You have pivots to trade against, and that's what you want. You want probably a retrace. If it comes back down, it turns out to be a dip buy, then you can at least long it all the way back up to here, or set trailing stops. All right, let's talk about oil. So oil got a bit of a dip, a bit of a rally today. I think it went up about 1%, I think, at one point, and it was pretty volatile. It went down, up and down. It was red and then was green. So ultimately, I think you went up like 2%, then came back down. You ended the day green. So to me, it still looks like a corrective move. You could be on a crash correction up. Target is 73. Let's talk about Apple. So Apple kind of chopping sideways today as well ahead of the Fed meeting. Finished the day with a green candle, up 22 basis point. I think most of the market, most of tech was up today in green, especially after making a new all-time high in the SPY. Lots of people are getting bullish. The algos triggered probably some selling, some take profits, and lots of selling occurred at one point. We did dip back down, but it was bought up once again. But Tesla target up here is at 249. Apple hasn't changed. Google got a nice counter trend rally, right? So now it should start to reverse back down. And if it does erase divergence, then you'll know that the C leg and the Y leg can end at any moment. Let's take a look at Roku. So Roku is set up for a dip buy if it can pull back in a three-wave move here. So maybe, just maybe, will I buy Roku? But again, no, no guarantee, and I don't want to get ahead of myself and tell people I'm going to start buying Roku again, because kind of got burned on the last time. SMCI working its way towards its target. Finally, it's a 326. Again, it's been a long road, right? It's been a long way down. Told you guys when it was going to break this level here that the dip buy scenarios were over and a correction could take over. I mean, look at what's happened since then, right? You went down 40%. It's pretty crazy. And let's take a look at the semis. The semis are strong. There's nothing wrong. Yeah, the semis are kind of set up for maybe a dip buy opportunity as well. Final rally into the flat scenario at 267. And if this does play out, then you're gonna get a big sell-off eventually back down to 190 on the semis. So this is gonna set up for a great short trade if it does happen. And if it does dip here, then it'd be a nice longing opportunity as well, and you have a pivot to trade against. All right, so again, let's shift gears here. Let's take a look at a few other things. I think we haven't talked about we did talk about the Qs. Let me talk about PayPal. Let's take a look at PayPal. PayPal. Okay, PayPal continues to rally up today. It was actually up 98 basis points. So let's see if it's going to get its C-like correction here for a deep pullback into a buy the dip opportunity for more upside. Yeah, that's to me that's what it kind of looks like here. Could the dip already be over? I mean, it could, but I think we need a bigger pullback given the size of the move that we've gotten already. And usually wave twos are deep pullbacks. Let's talk about crypto, right? So Bitcoin, is it setting up for a big sell-off as well into a dip buy? Because again, the count on Mara could have technically ended as you made a lower low. It could have ended. You're in the longer term buy area, but there's also more buy areas down here if you were to start impulsing down. So that's why I'm kind of like wary for what Bitcoin's going to do tomorrow. It could have a big pump as well if the markets see that the Fed has completely capitulated and its rate cuts galore, right? The market can get very bullish very quickly. And yeah, that's basically it. Again, I'm gonna let you guys know when I enter my positions and what based on what the market's gonna do, and we'll take it from there. I'm going in, you know, cash heavy, not heavy in positions, and just very comfortable. That's what I like. That's what I like to do. All right, guys, have a wonderful evening. And actually, wait, let me before I wrap it up. Let me take a look at Palantir. Someone asked me to cover Palantir, and I told them I would. So there we go. So for me, you got an impulse higher here, wave 3, and then you're just continuing to extend inside of a 5th wave. I had this correcting down, but since it broke the highs here, what happened is, take a look at the daily. I believe you're just extending this more and more and more. And this was a 1, 2, 3, 4, and 5. Or actually, the 3 is extending. So you need 4s and 5s to finish this up now, right? So you need this to finish because you had a wave 3 here. You erase divergence. You extend the wave 3. So you need something like this. So maybe Palantir is headed back up to the all-time highs at 45, and then the count should be done from there. So yeah, you're kind of inside. You're inside of wave 3 right now. It's very impulsive, as you guys can probably tell. So just ride it up. If you're in longs, ride it up. But again, just know that this will come to an end eventually. It'll pull back along with all of tech. All right, have a wonderful day, guys. I'll catch you guys on the next one.